April 15th. Quick one up video for you wonderful ladies and gentlemen. Happy tax day. Bulls were not in charge today. We know over the weekend the Iranians attacked Israel. While it wasn't that successful of attack, it does still have people on edge. And we are starting to see the pain trade reemerge with higher dollar, higher interest rates, and higher oil. VIX is starting to make some higher highs off higher lows. I don't think I'd be complacent with VIX until it's at least back below 1604 and really back below 1557 to 1538. On the upside, we could see 2081 to 2133, then between 22.5 and 2301. After that, we're looking at 2520 up to 2572. Don't be too complacent with volatility here. It's not necessarily super high. It is higher than we've seen recently, but generally it's not that high. As far as the dollar goes, that is also making some moves. I had told you anything over 105.01 was not friendly for the bulls, and we are above the channel now. If we were to pull back and just test the top side of the channel, that's 105.45, 105.46-ish, depending on how long it takes. I'd feel better with that below 105.384 at the moment, but I do wonder if 105.01 will now be supported. Had been some pretty stiff resistance. On the upside, we got the 2.618 of our consolidation range at 106.138. I think it's possible we get into the 107s, 107.178, and then possibly 108.72 to 109.55. And I will tell you, as higher the dollar goes, the more pain will be put on companies that do business overseas, the repatriation of those earnings, and numbers may need to continue to come lower. Also, PE multiple premiums are getting hit based on higher interest rates. Remember, when rates started getting up around these levels, market was at much lower levels, and we also had bank problems. So I wouldn't be surprised to see if there are some problems in some individual banks again, probably of the KRE variety. Interestingly enough, we're down into the top side of the old down channel. I had said I thought 88s to 89s would be some support in TLT. I think over 89.26 could see a rebound, maybe even to as much as 91.05 to 91.48, but I do think there is some potential, maybe lower even into 86s. The more this continues to drop, the more problematic it will be on markets. Remember, markets were able to deal with interest rates as long as they were sideways to higher, but slowly, and now things are starting to ramp a little bit more quickly. Probability of a rate cut is now pushed out to September again, and we will have the Fed in a couple of weeks. I'm going to imagine there's going to be a lot of angst around that meeting. I do think that Fed day range could set the precedent for the rest of the summer. We'll talk about that when we get a little bit more closely to it, but generally, you know, I like being long above Fed day highs, neutral inside, and short below. As far as SPY goes, we do have a little bit of a mini head and shoulders here. If we were to get the 2 times range, that would be 491.63. If we do the 2.618, that's 481.44. There are some interim support levels in between there, of course. Usually you break down through the neckline, check back to it before resolution lower. The neckline, of course, being 508.12. Anything below there I do think is still vulnerable. Back up above could get a little bit better if it is able to hold. We are into, like I said, into some interim support at 503.5. Then there's the 221 gap fill down at 497.21. And I do think that 497.21 to 496.05 area will likely be some support. The 100 MA is currently 490.34 and rising. That zone generally, I think, could also bolster some support, and that would line up perfectly with the 2 times range around 490.62. I do think that 500 level could be tested as long as we're below 510. For me to get bullish again, I think we need to really be back up over the 510s, the 50 MA, and I think at least back up over the 4-4 low at 512.76. Anything that rallies inside of that range could get people excited. It's sort of the long fly ball variety, but until we can get over and stay over, I will remain skeptical and cautious. As far as the Qs go, they'd been holding up a little bit better, but they also were starting to crack below the 4-4 reference low. Anything below 435.11 I'm still concerned about. And we did take out the 3.5 and the 3.15 fulcrum pivot zone at 432.74 up to 433.65. Remember, anything below there now does signal that a top is in. Back over 435.11, I think I'd be more confident, but I'd generally like to be over the 50 MA. Anything below that 437.95 and falling, I'm still going to remain a little bit cautious. Sometimes you can overshoot, but if we do get into the 435s, I'd probably reevaluate my situation here with that. If we do keep pulling back, we could fill the 221 gap fill to 425.61, and the 100 MA comes in around 421.27. If we do the apples to apples comparisons of the range extension, the 2 times range is 416.14. There's also some reference support at 416.76, so that 416s level. If we keep going, the 111.21 reference high is at 408.71, and then the 2.618 is down at 405.89. I'd probably start looking to buy the dip down there and selling some out of the money puts, particularly if VIX is pumping. As far as futures go, they broke down below some key reference supports. We really do need to see that back up over in the ES, at least 51.50 to 51.67.75. And then at 5,200, after that 52.31s. But I would really only think that the decline is fully arrested at the very least over 51.57, and really need to get over 52.57 quarter for still higher prices. Anything below here I do think risks the next level at 50.18. I'd probably be trimming a little bit here below the 51.16 half-ish level. That was our 4.236 extension that we were looking for. As far as the Qs go, anything below 18,138, and of course 18,414.75, which seems like a mile away, to me is still vulnerable. The next big support zone we had cited was 17,938 half. We cleared through that 2.618. If we keep going, the next big support zone is between 17,606 half to 17,584.75, and then 17,462 half. I'd probably be looking to cover some serious shorts and maybe looking to buy the dip there. If we do bounce back to that 51.57, I'll be curious to see if that's resistance. Also, that 18,138, that may act as resistance again. For still higher prices, to say that decline is fully over, again, 52.57 quarter, 52.82 quarter in the ES, in the Qs, at least over 18,138, and really to say the decline is arrested, 18,414.75, and then 18,709. Up opens I still think are vulnerable to being sold. Down opens maybe get bought up, but it would be curious to see if we get a gap and go that just keeps going. Usually what happens is you'll open up down, you'll chop around, and value will accept lower. Going higher and going lower is a process. Usually the big dump moves happen kind of toward the end of a move, and we're really just sort of beginning one. As far as Apple goes, I had told you I thought anything below 180-ish area is still vulnerable. Looks like the 50 MA is acting as resistance. I think over 176.79 could be a bounce play if we do clear back up to the 180s, but 20 MA really does need to hold now on pullbacks at 171.73 to, let's say, 170.71, that 20 MA to 10 MA zone. Anything below there to me could see dump time, but I think we could just chop around until earnings. I do worry, though, that Apple did announce this AI initiative with their computers and maybe even into their smartphones, but that isn't going to be enough to save the quarter. We now see Samsung taking share. We know Huawei is taking share in China, and I do think Apple could have a cruddy number this quarter. If it's down enough into the number, I think it could be a bit of a relief rally, but if they bounce it enough ahead of there, I do think there could be some continuation to the downside. Bit of a Costanza setup, and I do like shake and bake plays with this. So the more it's down, the more I think it has the opportunity to bounce. Tesla's a very similar situation. I know they had raised prices, but I saw that actually as more of a defensive measure to try to bolster margins. And the fact now that they're firing 10% of their work staff ahead of earnings, just days away, isn't a good sign for me for those numbers. I could see us getting down to 152.37 to 144.43, and possibly a really nasty dump scenario that does even retest 100. I'd feel better with this one if we got back up over at least the 50 MA at 181.31. If it's down enough, I think, into the earnings, there could be some capitulation there. Maybe there's a bit of a rebound, but if they do try to rally it, which sort of seems a little bit doubtful, but maybe there is some short covering, you never know, then maybe there's an opportunity for some follow-on to the downside. I don't generally like to press lows, but this one does seem like it is ripe for at least a test lower. Nvidia finally below 20 MA and 10 MA. It is, however, above the 50 MA at 828.77, so that would be a downside target if we do pull back. That 823.94-ish area was a breakout, so I do think that the 50 MA could act as some support, at least on the first test. If that were to break, 746s is the next big support zone there. As far as Bitcoin goes, still above the 50 EMA, which is currently 62,120. I'd probably get a little bit more concerned if we lost that 61,020 to 60,120. That was our key reference lows from back on 320 back to 3.5. If that breaks, we could see a larger liquidation break, probably to the top side of the old up channel at 54,911, maybe a retest of 53,125, which was also a key breakout zone. But to me, this still looks like a bit of consolidation, but it is a risk on, risk off barometer, and risk does seem to be coming off quite a bit here. Gold still ripping. I do worry that there could be a secure high in, but I would say that that would really only trigger below Friday's low of 216.02. I think you could just use the 10MA 215.77-ish because that held today. Anything below there, stop out. Above could keep going. The 2.618 is up at 230.06, but I wouldn't let it get below those 215s, 216s on you if you're long already. It's interesting that the Chinese central bank keeps buying and buying gold. Why? Maybe for Taiwan. Keep that in the back of your head. We are going to be entering and exiting monsoon season very soon, and I do think when those waters start calming, there could be some turbulence there as well. Earnings season is coming up. I had mentioned that there could be some selling ahead of earnings to pay taxes. We're also in a pre-earnings buyback blackout, and there's a lot of speculation about numbers. We did get a potential ghost of earnings yet to come with JP Morgan. I think that freaked a lot of people out on Friday. The fact that it couldn't bounce over the 50 MA today at 187.67, I think has people a little freaked out. The next big support there is 176.31. That lines up with the breakout from 112 and the 100 MA. Goldman Sachs, though, was pretty good today. They did have decent numbers, but did wind up not closing super duper hot. I'd need to see it over at least high of day at 412.87 after probably a couple of days consolidation to get bullish there. I do worry about stocks that are already up that see pops on numbers. It could be opportunities to sell into. Generally, again, don't chase up opens. Let's see if our levels that we broke down from become resistance. If they can't clear, the trade is probably sideways to lower. If they can clear and we do have a little bit of a look below and fail, it wouldn't take a lot on good numbers to get back up to reference highs. Retail sales are strong. I still think earnings are going to be okay. People are still employed. But I do worry if the Fed does continue to push rate cuts out. If the geopolitical situation does tend to pick up seasonally, we could be in for a little bit of a rough patch. That's it.